Welcome to a new update. The markets are extremely boring at this point, but we're going to look at the markets and we're going to look at the indices and the dollar at this point. We're going to say which levels are important to watch when it comes to the Bitcoin markets before we're going to continue into this week, which is not the most exciting one, but there are a few important days to look at. Before we continue, make sure to hit the like button, subscribe to this YouTube channel, and also check out our free trade letter and our premium membership in the description beneath. With the premium membership, you're able to follow trade IDs, my portfolio, and a few other traders who put their portfolio as well. And also you're able to join a great community. When we're looking at the markets, I'm looking at Bitcoin at this point, which has been seeing this corrective move, but then we are actually flatlining. As we can see, we're just going sideways, while on the other hand, we are having a pretty strong bounce up for the US indices. So there's a balance between the two, right? So what we see here is that the Nasdaq has been shooting up after the corrective period. We can also see that gold has been relatively strong and has also been bouncing up substantially. If we're looking at Bitcoin at this point, we have been falling down after a substantial rally. So either of the two are off. What do we see more? We do see that the DXY has been consolidating here. And when we're looking at the price action there, we should be looking or watching a case where we sweep the high at 105.64 points. If we sweep the high there, it seems very reasonable that this entire run is getting towards an end stage and starts to turn around again, especially since Powell is going to speak tomorrow. When we talk about Powell, we have to be looking at the yields, as the yields are currently starting to fall from a crucial area. Although the expectations have been increasing, and that's why you saw the yields running up. The yields have been running up from 3.3% to 4.1%. What you can see with it, and what I mean by it, is that the inflation has been adjusted. So this means that the methods of making the inflation numbers have been adjusted, and CPI came in higher and PPI came in higher too. So the data is relatively not looking great for people that were looking to get into deflationary periods. As right now the shocks are coming from China, and in China the inflation has been increasing and going up even more. In that regard, the yields have been running up, as the expectations are that the Fed will continue to hike, and right now there's even a chance of 26%. What the markets are pricing in, that the Fed will continue to hike with 50 bips in March and potentially go towards 6% with the interest rates over this entire year. In the meantime, it's storming here in Camps Bay. Hopefully it's not disturbing the video too much. But the effect is that the yields have been running up, and during such a period where also the dollar shows strength, the risk-on assets are not doing too great. But as the yields have been turning around and also the dollar gets into a period of resistance relatively soon, it seems likely that we're going to have some more strength on risk-on assets, and tomorrow can be such a day where we can see what Powell has been going to say about the inflation. Probably the data will be continuing to fall, meaning that risk on will continue the upwards trend. But this is one of the key features we have to look at in this week, and also the unemployment data which comes out at a later point during this week. So gold has been rallying up, indices are bouncing back up, which is in between thoughts. We are probably going to continue the trend as we are making a higher low here, but losing 11,800 points is going to cause another corrective move, which is going to be relatively massive, as we are dropping back towards the range low, and that is not going to suit well. But the yields are falling, the XY gets into the resistance point, and what is Bitcoin doing? Bitcoin is currently consolidating on the support level and has been falling, although the markets of the indices have been going up. And the reason why is the Ethereum unlock, Mt. Gox unlocks, and also the effect of Silvergate, which is collapsing, which we already knew, but it's going impacting the markets a bit more. And the important events around Silvergate are USDC and some others. All have been taken care of mostly already. Mount Gox is an effect that we are seeing, but we already know that it's going to be spread out and it's probably going to limit the amount of sell pressure. The same goes with Ethereum Shanghai, which is an event that starts to take place beginning April. Mount Gox will be on March 10th, which means that these three events, the effect fundamentally of these three have already been taking place, and the effect afterwards will only be a positive one, as people are relatively feared into these events, which as a result has a sell the rumor buy the news concept, right? So it means that going into the event, people are feared, so people are starting to sell off, and then once the event starts to be finalized, the markets are going back into equilibrium. Same goes for all the FUD surrounding the inflation data at this point, and the Powell speaks. What we know is that the previous rally was caused by the effect that most likely inflation was going to drop down, right? And now we're getting into a corrective period as the markets are pricing in some more hikes. That's all negativity towards the event to take place, which most likely has a positive response. So yes, we could be having a further corrective move on the crypto markets, but ultimately these areas here are giving you an opportunity to actually buy into it, because afterwards we go back into equilibrium. So what I'm looking at here is that Bitcoin has been falling this from 23.5 to 22.0, and now it's consolidating, actually flatlining, which means that if it breaks back above this level of 22.6, we most likely are going to have continuation to the upside, right? So what I'm looking at is that I'm looking at longs in this range, and I'm looking for longs that take the resistance out at 23.8 afterwards. So I'd prefer to have another sweep of the low, probably on March 10th when the unlocks of Mt. Gox start, or tomorrow when Powell speaks, and after that we reverse back up. So I'm looking at this entire range as a support level, which most likely will give continuation to the upside. Although if Bitcoin is going to lose the area of 21.5, then we are taking the liquidity beneath this area as well, and then you have to look at 19.7, and that's the CME gap as the next crucial area. But not every CME gap gets a full close. So we are on the edge of volatility again. If we crack 22.6, probably we're going to go higher, and most of the charts are still looking better than Bitcoin at this stage. Ethereum is just consolidating, going sideways, ready for a new breakout to the upside. Although if we're going to lose the level at 1520, we're going to get a case that we're retesting 1200 again. So that's the updates for today, which means that dollar cost averaging at these levels is still the best way going forward, and that most of the events are usually FUD events and have the actual effect taking place before the event, and then afterwards it goes back into equilibrium. Tomorrow I'll be back. Make sure to hit the like button. Ciao.